Hello, Alex Cole. March 12th, 2021. How are you doing, my friend?
Doing very well, sir. Good morning to you.
Good morning to you as well. Shall we go through a little go, no go research flight path review for the week ending February 12th? Let's see how things turned out. This note went out to subscribers pre-market Monday morning. And let's just see what happened with the trends. Starting with a look across asset classes at a go, no go heat map.
Yep, another interesting week. Lots of volatility. Seems to be par for the course for 2021, but themes remain in place. This is the asset class map. One second. This is not the asset class map that I wanted to show you. This is the asset class map. Apologies.
No problem.
But these are the main asset classes: equities, treasuries, commodities, the dollar index, and cryptocurrencies represented by Bitcoin. So the themes remain very much the same. The dollar is the only one that's a little bit out of place there, as we've talked about that over the past few weeks, as a strong dollar could potentially be headwind for stocks globally. But the equity markets, the commodity markets, the cryptocurrencies, all in strong go trends.
And so let's pull up that dollar chart, the DXY dollar index, just to see. I mean, we've commented in GoNoGo research for months now that a stronger U.S. dollar could be a headwind to emerging markets, to commodities trends, and really equities generally. Do you see this as something structural? Are we looking for the next leg higher, or is this just a counter trend correction in a longer term no go for the U.S. dollar?
It's going to be interesting to see how it plays out. We've been talking about it as a correction in a correction against a more overwhelming downtrend on the larger time frames. We are seeing, though, a higher high from the high that we saw back in February, and a higher low from the low that we saw back in January. So it'll be interesting to see if this can continue. This series of higher highs and higher lows can continue. We are approaching the zero line on the oscillator again, and that'll really be important to see whether or not the oscillator finds support there, or whether it crashes back through zero like it did last time, and really shows a struggle to maintain the go trend. If we look at it on a weekly chart, we can see that it is still in a no-go trend, and it is still, even if this becomes some kind of high, then it would be a lower high than the high we saw back in November. And again, we are riding the zero line here on the weekly chart. So an important juncture, I'd say. I don't know if we'd be able to say that the larger downtrend is over. This could still be a correction against that. But there is enough going on the daily chart to suggest some sort of short-term trend in place, higher highs and higher lows. So we'll see how that plays out.
Sure. And obviously, the concept that we're referring to, macroeconomics tells us that if investors are raising cash, you're seeing an upward trend in the U.S. dollar, then obviously they are fleeing from risk on assets. But as Alex, as you just showed with that cross asset class heat map, we're not seeing the flight to safety in treasury bonds. We're not seeing investors pull out of riskier assets. So let's switch over then to the GoNoGo RelMap. Let's look at the equity sector specifically, because there's some really interesting rotation going on. You've heard a lot of Wall Street analysts talk about the move to value. What they're really referring to is an effort from cyclical sectors to regain outperformance. And a lot of that is based on a new stimulus package. We heard from President Joe Biden last night, $1.9 trillion going out and starting to hit Americans' bank accounts as early as this weekend. We're also seeing a massive push on the vaccine rollout to reopen what was the traditional economy. And so what has not worked throughout 2020 in that pandemic period is really starting to come back. So Alex, tell us a little bit about what is happening on this chart right now. What is a GoNoGo RelMap?
So a GoNoGo RelMap is the idea of applying the GoNoGo Trend, which is the concept of taking several inputs, several trend ideas and concepts, blending it together to color code as securities move through trends. But what the RelMap does is it applies that to a relative ratio. So in this case, the price of each sector to the base, which is the S&P 500. And whenever you look at relative strength, you can get a sense of outperformance or underperformance just simply from, if that ratio is moving up, then we have outperformance on the security that's on the top of that ratio.
Mm-hmm.
But using the GoNoGo trend is really useful and sort of illuminating, because it can highlight the trend using that blended concept on each of those ratios.
Mm-hmm.
And if we talk what you were just talking about with the, there are a couple of themes at play. I think there's been a lot of discussion about, there's even almost a bracket of stocks now called reopening stocks. I've heard that phrase a lot the past few weeks, as the thought is that the economy and some of those industries will be able to reopen and show some strength. But at the same time, I think I read that over 70% of Americans have said that they're going to put some portion of that stimulus check into stocks. So it'll be sort of, where do they put that? And with with such publicity around the tech stocks and the exciting stocks, it'll be interesting to see where that money gets allocated.
Absolutely. So just for first-time viewers and listeners, what we're seeing in that top panel is the XLB. That's the materials sector of the S&P 500. And we're looking at the ratio chart. So the materials sector compared to the performance of the index as a whole. And look at that, going from purple and pink, a strong no-go trend, moving through those amber colors, finding some neutral territory against the index, and now recently, since March, moving into a strong outperformance. The blue bands indicate that the materials sector is outperforming the index as a whole. So if we disaggregate a little bit, when we're talking about market cap weighted indexes like the S&P 500, you're seeing when the tech sector is underperforming, that's really bringing down the broad index. And where investors are allocating right now is to the sectors of the economy that are going to benefit most from reopening, from a pent-up demand. Obviously, the materials sector, we're going to talk about commodities more specifically in a minute. That materials sector obviously finding gains as factories and industrial manufacturing come back online. They're obviously going to be burning fossil fuels to run those factories. They're going to be using base metals as raw inputs. And so that's what we're seeing there. Alex, if you just drop down middle of the panels, we're looking at XLE. That's the energy sector. Strong outperformance now for the past couple of months. The financials, another cyclical sector. And we can talk a little bit about Treasury interest rates moving up, and the bond yields are obviously sparking better performance for financials and lending companies as a whole. XLI being the industrial sector, that's aerospace, defense, transportation, and manufacturing, things that were very sensitive to the recessionary economy that we were forced into last year by the coronavirus pandemic.
Yeah, and it was nice to see this week. We noted in the flight path that it was nice to see materials come in line, right? To see some leadership and some outperformance from materials to join those other sectors that have been showing. We've seen that rotation into energy, financials, industrials, and we've talked about those. So seeing materials at the beginning of the week starting to go into that strong go trend, like you said, sort of furthers that narrative.
Absolutely. So let's jump out of the GoNoGo RelMap and let's take a look at the materials sector specifically. Let's take a look at price with a GoNoGo trend chart of the XLB. And look how price action played out this week.
Yeah, we got a re-entry, a low risk trend continuation icon here, low risk entry, that green circle, which is, as our viewers will know, but maybe if you're new, you don't, that's the interaction between the trend indicator and the oscillator, the GoNoGo oscillator on the bottom. When that finds support at that zero line, we're really able to determine that momentum has come back in the direction of the trend. So that's when we get the sort of the trend continuation icon. And yes, you can see that happened on Monday, and then we've risen steadily since then in the materials sector.
Brilliant. And so, as is always the case with GoNoGo Research, we want to look at broad themes. We want to get into the asset classes that are moving, and then drill into single securities, specific ideas. Subscribers on Monday morning were alerted to MDU Resources Group Incorporated. That ticker is MDU. Let's see how that played out. It had It had really strong performance going into the week, and has obviously continued its strong go trend on those blue bars, but a little bit of a consolidation.
Yeah, the ideas always remain the same with these charts, and so hopefully that's what you get comfortable with when looking at them and using them, is to look for the same situations developing. And this is a nice strong trend, right, demonstrated by the blue and aqua bars, and generally speaking, the oscillator staying above zero, finding support at zero. That's what we like to see in these trends. And so we've seen continued icons suggesting that it's okay to get back into this trend. And the last one of those was, I think this was on Thursday of last week. And again, then that indicated we may go higher in the short term. We did. And then this week, yeah, there's been some consolidation at the highs, but momentum still positive, not yet at the zero line. So trend in place, I suppose, would be the takeaway from this.
Absolutely. And what we know about trend following is that if you can get with and then stay with a trend that's outperforming, that's really where investors tend to find the greatest gains. It may be simple, but it's certainly not easy to do. All right, well, let's move on from some resource companies. Let's just take a look at that ratio chart, specifically of SPYV to SPYG. Now, again, if we're going to disaggregate everything that goes into the index, we'll find that what we're really looking at is cyclical sectors. It's not really a value versus growth debate, but this is how the good folks at S&P have captured that. And boom, the relative underperformance of value or cyclical sectors against growth names has been really strong, right? You wanted to own technology, communications companies throughout the pandemic, the stay-at-home trade, and look how that has reversed. Subscribers got this early Monday morning, but you see that it has continued to break out above that ascending triangle. We've had a strong basing pattern, and then look at the oscillator, just leaping into higher momentum on heavy volume.
Yeah. And the great thing about relative strength, using relative strength and then applying the GoNoGo charts to it, is that you can use anything as your proxy. So we've got value versus growth in here, and that's definitely that's been a theme over the last few weeks of seeing rotation from growth into value. But like you said, another chart that we've looked at and that's floating around is looking at financials to technology. If you want to be a bit more specific, you can do the financial sector versus the technology sector, and the chart looks very much the same. So there is that rotation away from growth, or more specifically technology, into the cyclical or more industrial companies, which tend to be value securities. So absolutely, really broken out on a long-term chart here, and as you hope, and this is the way these charts, you look for the oscillator to lead. And you see the oscillator break above zero back in November, find support at zero, and then break back up into zero. And that coincides then with the color change. And again, anecdotally, we continue to say this, but we find that the color change often happens on breaks of important levels, or on a breakout above an important trend line. So this is a very nice setup, really, for seeing how these kinds of moves happen on the charts.
So just keeping in mind that we had a strong move on the Nasdaq Thursday, let's take a look at that financials to technology. That's the XLF versus XLK. For those of you who are new to the game, look at that ratio chart on a weekly basis. Yeah, and now we're seeing financials really outperform,
and moving into the stronger blue bars on heavy volume. Which is another foundational concept of technical analysis, is that if you see a break, or if you see the beginning of a trend, you want to see it accompanied. Well, I take that back. The beginning of an uptrend, you want to see that accompanied by enthusiastic buying, a heavy volume. So, nice to see the oscillator go to the darker blue here as this go trend is really taken off.
Brilliant. Yeah, that's just a glorious example of what we're seeing with the industrial economy, and that rotation into cyclical sectors. So, as perhaps the greatest investor of cyclical or value focused companies, let's pull up a chart of Berkshire Hathaway. Just take a look at what Mr. Buffett and friends are doing from a trend perspective. And this is going to be on the. Let's take a look at the daily chart, Alex.
Sure. Sorry. Yeah. Let's. There you go.
Wow.
Yeah.
Big week for Berkshire Hathaway.
Yeah. Yeah. Same themes. Trend in place. Continuation icons showing you that momentum continues to surge back in the direction of the trend. And this has been a very strong week. Yeah, this was Monday morning. We opened at about 255 and went as high as 267, but now we're at around 260, 265. So a strong week, continued progress, upward movement for maybe the greatest value company of all, right?
Exactly. Everybody has loved investing in ETFs. Get exposure to a theme. Berkshire Hathaway is a perfect way to do just that.
Yeah.
So then, just as we're wrapping up, leaving some folks with other single stock ideas, we took a look at Turquoise Hill Resources, which is a smaller cap minerals mining outfit. Let's see how they performed throughout this week.
Yeah.
And yeah, what jumps off the chart for you, Alex?
This was more interesting as a stock picking sort of idea. We noted that in the newsletter this week. It's a material, it's a company in the material sector. It also takes advantage of some of the strength of commodities, right, being in the business that it's in. And we noted at the beginning of the week that it had come back and corrected. I think this arrow is actually left on here from when that went out.
Mm-hmm.
And it had corrected and it had fallen to the zero line. So we noted that this may be something that, if we see continued strength or renewed momentum, this could catch up, could rally perhaps, and, looking at an initial target of around prior highs. So it had a good week. It had a strong week. It's up. And we're still seeing the oscillator ride the zero line. So hasn't really gone significantly into any kind of negative territory, which would indicate that there was bearish momentum. So still on the radar, still looking for this one to rally potentially back up to about 17.
Fantastic. And in closing, we saw actually big moves yesterday in the this week in the Nasdaq, in the QQQ index. Let's see how things have performed on a daily basis using a GoNoGo Trend chart.
Yeah, this has been a fun chart for me this week, and I was talking to other educators in technicals about how this was a perfect head and shoulders from a textbook perspective. And we saw, the full range of what you want to see on the GoNoGo chart play out here, from, the higher highs in price being met with lower highs in the oscillator, showing some bearish divergence. We see what I like to see in pattern analysis with GoNoGo charts are some specific things happening with the trend. And one of those is on the right shoulder of a head and shoulders. I like to see the trend start to deteriorate and be unable to maintain the go colors. That suggests to me more likelihood that it'll break the neckline.
Mm-hmm.
And with that, we also expect heavy volume on the right side of shoulders, because that's the downward moves.
Mm-hmm.
And definitely over the second half of a pattern, we expect volume to pick up. And that's what we see here with the oscillator going to dark blue. So the oscillator, we like to see that lead the break of the neckline, and it does that, and then finds resistance at zero. And then on the break of the neckline, we see the first no-go bar. Mm-hmm. And when we were talking about this at the beginning of the week, we were retesting that neckline. Now that was really significant. And then on yesterday's price action, it jumped back up above the neckline, which will have spooked quite a few people and made them think that this could fail as a pattern. But when you look at it in context of the GoNoGo charts, I would say, don't hurry to that conclusion just yet. The GoNoGo oscillator is riding the zero line from below. And so if it gets turned away from here and goes back into negative territory, we would expect price to move lower again. So perhaps it's a case of the neckline, that giving us a bit of a false break back above the neckline, Perhaps that neckline should be sloping a little bit higher.
Mm-hmm.
There's some subjectivity there, but the objective nature of the GoNoGo charts says that right now we are still in a no-go, and the oscillator is finding resistance at 0. And today we've come right back to that neckline. So interesting. Is the short rotation away from tech over, or is this just a new lower high, right? Which would indicate the no-go trend is really quite surely still in place. If this is now set a lower high and the oscillator gets turned away from 0, we could expect a new leg down. So everybody yesterday was quick to say, well, that was quick, everybody talking about rotation into value.
Yeah.
And they were talking about how, well, that didn't last very long. We'll see that today we moved down and we're right back at that neckline. The oscillator's at 0. So interesting chart.
Which is why, I mean, it's so helpful to me to have GoNoGo charts where you've got a composite of all of the trend indicators, providing all of that information about the trend condition right there at a single color. And so we're still in those pink bars despite what was kind of a short-term pop. And the market is there to make a mess of as many situations as possible, right? It's going to confound investors. That is sort of the job of Mr. Market. And so having a bigger picture look, or a look at a lot of information, but still being able to have that clean price chart is just really helpful. So no need to jump to conclusions. Certainly don't want to react just to the headline news that we're all peppered with. Really appreciate your time today, Alex, and thanks for walking us through the objective view provided by GoNoGo Charts. More information at www.gonogocharts.com. Have a great afternoon, my friend, and I'll talk to you soon.
You do the same. Thanks a lot. Take care.
Take care.